So at Boon Brokers, these are the 12 main reasons why we see mortgage applications declined. Just before we start, there's no shame in having a mortgage application declined. 1 in 6 people get refused mortgages, and it can be for reasons totally outside of your control, but these are the top 12 reasons in the UK. So the first one is debt. It's fairly self-explanatory. If your debt is way too high, especially if it outstrips your income, you'll be declined for a mortgage application. Main types of debt the lenders look at are credit cards, hire purchases, store cards, personal loans, PCPs. Anything that appears on your credit file, lenders will consider as debt. And it's important to realise that when we submit a mortgage application, the lender will see anything on your credit file. So it's best to be upfront with your broker at the fact find stage. So the second reason why a mortgage application may be declined is because of your income. Now, there's lots of reasons why your income might not be acceptable to a lender. For example, if you're self-employed income is treated very differently to employed income. If you're self-employed, normally lenders need to see at least 2 years of accounts, specifically tax calculations and tax year overview documents, before they can accept that as income. So if you've just started a limited company or a partnership, sole trader, you should expect to wait for at least a year as a bare minimum before lenders can consider that income. Also, if you're employed and you've just started a new job, a lot of lenders might need to see at least 3 payslips in that new job before they can accept the income from you. That being said, there are a few lenders that can accept just a signed employment contract, but it's knowing where to go. Also, for example, if you're an agency worker and if you've got only a few months of payslips, normally lenders need to see at least 12 months of concurrent payslips before they can accept agency work, because it's considered temporary employment. So they need a long stretch of time to be able to accept that income from you. And obviously, if you're applying for a loan which requires a far higher income than you've got to achieve, then you may be declined on that basis. For example, if you're going for a loan for $1 million and your income's 20,000, your mortgage application is going to be declined because your income is not sufficient for that level of loan. The third reason why a mortgage application may be declined is to do with your financial history. So this relates more to your adverse credits. So if you've got CCJs, bankruptcies, late payments or defaults, any of those within the last 6 years, that can significantly negatively impact your chances of getting a mortgage. And if you do have any of those, they're called adverse credits, some lenders will just refuse straight away. So that's why it's really worth going to a broker like Boon Brokers, and we can tell you which lenders can suit your adverse credit position. If you've really got bad adverse credit, you might need to go to a very niche specialist adverse lender. The fourth reason is due to your financial associations. Now, this is quite a rare reason why a mortgage application may be declined, but if you are linked financially to people who have got very poor credit files, so perhaps a large amount of defaults, CCJs, bankruptcies, things like this, you can be linked to that person, and you can check this on your credit report. So what I'd advise you do, if you haven't looked at your credit report before, it might be an idea to follow the link below to check my file. Now, with the link, you can set up a free trial, 30 days. Just make sure at the end of the 30-day free trial, you're aware that it will move on to a paid plan, which is £14.99 currently. But you can cancel before that starts. And it's a really handy tool. Check My File will show you reports from TransUnion, Experian, and Equifax, so you can figure out all of your financial associations on the one report. It's very handy. The fifth reason is if you're not registered on the electoral roll. Now, this is more to do with the fact that when a lender takes an application from us, they might not be able to match you. So they might not be able to locate your file on their system. They usually use electoral roll information to match your credit file on their database. So if they can't find you, then they may just have to decline the application. So it's always worth checking to make sure you're on the electoral roll. It's really easy to do, and you can check this once again on your credit file. So another reason why a mortgage application may be declined is if you have too much cash tied up in assets and not the income. Obviously, lenders, they can't really take asset value into account when assessing how much you can borrow, because assets, they're volatile. You may not be inclined to sell them, whereas an income, you're getting that in every single month. And it's not, even though it's not guaranteed, you could technically, if you're employed, lose your job at any time. It's far more secure for a lender to consider. Saying that, there are some lenders, the likes of Coutts Bank, that can actually lend against assets. They'll lend against potentially car collections, watches, luxury items. So there may be options available to you. Just contact us and we'll source for you. Your previous track record is also a reason why a mortgage might be declined. For example, if you've had lots of mortgage arrears, or even if you've taken a mortgage product, lots of mortgage products, and redeemed them early. For example, there's tracker interest rate mortgage products that have often no early repayment charges. Now, even though you can repay these early without cost, lenders can be a little bit wary if you're doing this frequently with previous lenders. So your track record does come into account. You should discuss this with your broker before moving forwards. Your income type is also a reason why a mortgage application may be declined. I touched on it a little bit before, but for self-employed people, lenders typically need to see at least 2 years of books before they can accept income from you. And they normally need to see tax calculation and tax year overview documents. When you submit your tax returns to HMRC, those documents are generated, but lenders need to have at least 1 year of these books, but normally 2. So if you've just started a limited company or a sole trader business in the last 6 months or so, you won't be able to use that income quite yet. So therefore, any application you submit to a lender would be declined just based on income. Also, if you're employed, if you proceed with a lender that needs to have at least 3 months of pay slips before accepting income from you and you've only just started your job, again, your application may be declined. Or if you've only just literally started and you've got a signed employment contract, there are very few lenders who can accept this. You've then got the likes of temporary work, so agency work, 0-hour contract work that lenders basically view as volatile, where your pay can change from month to month. Lenders typically need to see a strong track record of income on this basis, so they normally want 12 months worth of simultaneous payslips, concurrent payslips, before accepting it from you, and they'll accept those and they'll average 12 months worth, as I say, before assessing the income that they can use for your mortgage application. So again, if you're an agency worker and you've only just worked for 3 or 4 months, you should expect most lenders to sadly decline your mortgage application on this basis. We get quite a lot of CIS workers as well, construction industry scheme workers. Their tax is paid a little bit differently. Most lenders will class them as self-employed, but at Boon Brokers, we do actually know some lenders that can take that income on an employed basis and treat it like an employed applicant. So it really stresses the value of using a mortgage broker to find the most suitable lender for you. Errors on your mortgage application is another obvious reason why a mortgage application may be declined. You want to try to use a broker that's well experienced with every regulated mortgage lender in the UK. Lenders have very different application platforms, so a very inexperienced broker may make mistakes. So you want to use a reputable whole-of-market mortgage broker like Boon Brokers. If you're currently applying for credit, that might cause your mortgage application to be declined later down the line. When your mortgage broker assesses how much you can borrow, they're looking at your income and financial commitments at that time. Now, it normally takes your credit file 6 weeks to update, so if you're in the process of applying for credit, lenders can process random soft searches on your credit file, and they might see that prop up at a later date. So if that happens to you, even if you're at full mortgage application stage, you may see your application declined randomly out of nowhere because of this credit commitment that's now appearing on your credit file. So just be wary when applying for credit and always check with your broker that you can still afford the mortgage on that basis. Also, it sounds obvious, but if you submit the wrong type of mortgage application, you should expect it to be declined. If you're not a first-time buyer, but you're applying for a first-time buyer mortgage product, the lender will ultimately find this out and they will decline your mortgage application. Same thing goes as if you're applying for a buy-to-let product, but you've never owned a home before. A lot of lenders need you to own a home before you can apply for a buy-to-let, unless they allow first-time landlords. So your application may be declined on that basis. Again, it's really important to speak to an expert mortgage broker to make sure you're applying for the right product. And the last main reason why a mortgage application may be declined is if your story doesn't add up on the application. In other words, if what you're declaring isn't actually true. So if you're providing income documentation that's perhaps fraudulent, then the lender will find out. They can match tax codes and they can do open banking checks to make sure the income you provide is genuine. Brokers also have a degree of responsibility to check documentation too. And there can be very serious consequences as well for submitting fabricated documents. So you need to be really, really careful. Don't do it, it's never worth it. So a very common question that we get is, can a mortgage application be declined after the agreement in principle stage? And the answer is obviously yes. It's in the name, it's just an agreement, but in principle of you submitting the loan application and all the documentation that you provide matching the agreement in principle application. So if at full application stage, the lender reads through your documentation and it doesn't match what you've submitted at the agreement in principle stage, they'll decline on that basis. Or as I discussed before, if you've been applying for credit commitments and that obviously changes your financial commitments after AIP stage, that can also lead to a decline. The best thing to do to ensure you don't get a decline on that basis is try to keep all of your income and financial commitments, your whole position the same at agreement in principle stage as it is at full mortgage application stage. That will really increase your chances of getting approved. So if your mortgage application is declined, don't panic. It might be for a reason that's very easy to rectify. You just need to speak with your broker, and I would always recommend using a broker because there's likely going to be alternatives that you can go to. Or as I say, it might have been a mistake, an admin mistake on the application. You just need to make sure you're checking with the broker or the lender to see what the next best alternative is. But the best thing to do is, as I say, don't panic and try to find an alternative.